Well, today was one of those days that I've been warning about for several weeks. And if you are newer to the channel, I would encourage you to go back over at least the last 2 to 3 weeks' weekly update videos that I've done to take a look at what I've been saying. Thank you for watching this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we will be doing technical analysis on the S&P 500 for Thursday, September 3rd, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today, the S&P 500 was down 3.51%, and we closed at 3455.06. The first chart that we're going to look at here is a 2-day, 2-minute chart of the S&P 500. So you can see yesterday on Wednesday the 2nd, we had a pretty good day, but this morning on Thursday the 3rd, we gapped down at the open, and the market pretty much just sold off all day, and then we bottomed around 3:35 in the afternoon and had a slight rally that took us off the bottom, but we did close really towards the lows of the day, again losing 3.51% on the S&P 500. And the S&P 500 wasn't the only thing that was down big today. The DIA that tracks the Dow Jones Industrial 30 was down 2.72%. The IWM that tracks the Russell 2000 Small Cap Index down 2.93%. The MDY that tracks the S&P 400 Mid Cap down 3.02%. And look at this, the triple Qs, the NASDAQ 100 down over 5% for the day. So this was a very bad day for equities across the board. Next, let's take a look at a 1-year daily chart of the S&P 500. So each candlestick does represent 1 day of trading on this chart, and the orange line is the 200-day moving average. This blue line is where we're going to start. This is a trend line that I've drawn across the bottom of the uptrend that we've had that's been intact really since the end of June. And you can see here that we've come down and touched this trend line several times, and we closed just above it after trading below it in the latter part of the afternoon. So far, this uptrend is still intact even with today's sell-off. However, if the market continues to roll over from here, it will break this uptrend. And remember, even after today's sell-off, we are still trading over 10% above the 200-day moving average. So don't think it can't get worse than this. This may have been just a 1-day sell-off that has pulled us back to the trend line that has been intact since the end of June. However, with as overextended as this market is, it wouldn't surprise me to see the market continue to sell off, at least in the short term.